Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein with your end of the week review for this Friday, the 10th of March, 2017. And folks, I'm early. I'm at 11:10 in the morning. I normally do these 2, 3 in the afternoon, but I have to be out of the office in the next 20, 30 minutes, so I want to make sure this is done because I won't be coming back in until Monday morning. All right. Metal markets under pressure, as you know. What have they been under pressure from? The idea that the Fed going to raise interest rates this coming Wednesday, March 15. Okay, we saw the jobs data came out at 235,000, bigger than the trade estimates. There was a whisper number of 230,000. Okay, and we saw unemployment rate at 4.7 and 6-cent rise in the hourly wage. All right, and you're down to the $1,200 zone in the gold. The gold's going to have a hard time with a series of interest rate hikes fighting it. Copper's another market that's been having a hard time. The market's bouncing at least off its lows, but you know, as long as China's not importing all the amounts of copper that it used to, what happens is they're not importing as much, you're not exporting as much because you've got Escondida mine and you've got Grasberg not able to ship out, but a lot of that copper's on the ground there. So this isn't the prettiest situation you can have in those markets. The dollar index down. It rallied on the rumor that we were going to see strong jobs data, and it's like the buy the rumor, sell the fact, and now you're selling the fact that you have it. The stronger market, to surprise people, is taking place in the euro currency. Pay attention to that, and that's because they're closer to stopping more QE than anything else. Yes, we're embarking on higher interest rates, but the first move is the dollar down because it anticipated it, and Mr. Draghi giving a bit more, if you will, hawkish idea on the euro. So when we look at a monthly gold chart, let's go to the month first. We've got lower highs, lower lows, and we're right back into a general support area of the 18-month moving average of closes. Momentum, however, still pointing down. And if this market wanted to drop to a lower Bollinger Band, that would be all the way down from here, pretty far, $150 lower. When we come to the weekly chart, I want you to look how this is going. Now, I could start making an argument right now that because this low took out that one, that we've got a down thrust. I've been waiting to see here, but I'm going to make up my mind next week. Which way do I want to play that? I'd like to see how the market finishes out today, and I don't have that luxury. When we come over and we look at an area chart of weekly closes, the fact that you haven't yet closed under this low leaves me still very much in the up thrust mode overall. But the swing line, you've got a higher high and a lower low. You are out of your uptrend. That is over in history on the weekly charts. But I have pointed out on the dailies that the support levels are between the 100-week moving average of closes and the 18-week between 1202 and 1194. And I think I'm right on the money there at this point as to where the potential support, at least right now, is in the market. Potential support doesn't mean it's an uptrend. It's a support zone, and that's where I say it is. You are not trending in this market. In terms of momentum, you know you've been pointing down. You see it in price, and momentum is still saying that it's pointing there, but it's not rushing to the downside. So on this break, you know, you've got to be a bit careful here because you're down, if you're bearish, into a support level. When we come to the gold ETF, the weekly chart, same thing. You're down to the 100-week and the 18-week moving average. You're correcting already, not overbought any longer. You've corrected. Past tense is really the right word, where you don't have readings over 70, so you're not overbought. You're getting back into a balance. I just did a part of a survey for a company called Kitco, a big gold letter place. And they asked me what I thought for this week. And I said, well, you know, on the gold, I'm looking for 1,200 support. So we'll see if that comes. I don't know why these ETFs are taking a bit longer to fill in. Here's your gold miners ETF. Got a higher high. Now, 2190 was the last low. You've hit 21.19. So you got a higher high and lower low. The support level here is a bit further apart than it was on the other ETF. It's at the 18 and the 100, and they're farther apart. Momentum here, unlike the other, still ugly, still pointing down rather nasty. Now on the silver chart, you have a pattern where you're trying to correct, and if we look at this break low, I really shouldn't have this arrow down yet because you didn't take out 1683.50. That's my mistake. They should still be up until you take out that number, and you're right into support at the 18-week moving average of closes, but momentum is turning down. My brain, because I'm trying to get this all done in a rush so I can get out of here today, I thought it had gotten under that. My mistake. Copper market. Lower highs, lower lows, prices at 258 or under the 18-week moving average of closes. That is bearish. So the bias is down, the longer-term trend is down, and momentum is down. This market's resistance, 261, should it decide to extend this break in a major way, you could be in the 240s before you know what's going on. In the palladium market, you've got the pattern of a lower low and a higher high, back down and under the 18-week moving average with momentum down. There's a pretty common theme we're seeing, ugly. All of the momentums are turning down, and even the palladium market, which tried to hold on the most this week, has now got a pattern of lower highs, lower lows, so the swing line's down. That's countered because it's over the 18-week moving average of closes. And as you can see, it is the strongest. It's the furthest away from its 18-week moving average of closes, but it did lose the embedded reading, and that often means, not always, but often, that price and the 18-week are going to try to come together. In the dollar index, your downside momentum is abating. It did have some, and now the question is it's drifting sideways. The pattern is bullish, higher lows, higher highs, support 101.27. So this market is still looking in the upside. And interestingly, notice how the Bollinger Bands are rushing to it. So they're going to wrap their arms around price and start going sideways. The big thrust in gold is, and not in gold, in the dollar index looks over for the near term. So I put that all together and I try to figure out what I can do with it. And let me tell you before you disappear, I want to teach you what I do. It's really that simple. If you have 5-10 minutes a day and you give yourself 2 weeks, 2.5 weeks, my charting course will teach you. It's 54 videos. In addition to the videos, every day I come on and I review 40 charts, but I teach you in those reviews what you're doing. Then I hold live webinars so you can come in and ask questions. You can even call me on the phone. Believe it or not, I talk to a lot of people all the time. And I do my best, if they're my students, to teach them what it is. Not my student, don't bother the call. I'll talk to you, but I'm not going to teach you. You're going to learn the swing lines, the moving averages, slow stochastics, window envelopes, which we don't even discuss here, the techniques of using inside days, outside days, everything else that we've got, and of course the very big importance of Bollinger Bands, which you have to master to learn a lot of this type of trading, and other profit-taking tools as you see here. To go along with it, twice daily updates. Now I used to sell this course for $179.95. I redid the whole course, made it an online course for Christmas. There's no more CDs, no more shipping and handling. I started the price out at $69.95, went up to $89.95. Now I'm offering a $15 discount if you want it. So you get the $90 or $100 charting software. You're going to get the $60 worth of my research and a $15 discount. Everything combined, $74.95. But I promise you, the price number one retail is going to go up again. The discounts will never take you back to where the prices were, and I won't do this that often. So how do you get all this? It's simple. Either call my staff, 866-973-2077. You can go to our website, www.iraepstein.com, and just go to education. You can click right up here if you're watching me on YouTube. It'll take you right to the area. And I've even got a short video there to explain to you what I'm doing, and a facts page so that you can read about all the facts of what it is, how it all works for you. Pretty simple. Underneath us, no, that link won't take you to the course and all that you get, but you can offer, number one, get our free offerings, and number two, ask questions of us, and we will get back to you. I'm Ira. You have a great weekend, and I'll see you all come Monday.